You step into a crowded auction hall. The air is electric with noise. The sharp bark of bids, the rising chant of the auctioneer, the shuffle of restless feet. Everywhere you look, hands shoot up. Voices shout higher numbers, faster and faster, as if missing a single beat would mean losing the opportunity of a lifetime. And yet, in the corner, one man stands perfectly still. His eyes are fixed on a panel of data in front of him, his fingers slowly turning the pages of a small notebook, utterly indifferent to the frenzy that engulfs the room. Then, at the exact moment the crowd pushes the price one step too far, he smiles faintly and raises his hand. A single gesture. Minutes later, the entire hall realizes they've just overpaid, and he's the only one who sold at the very top of the day. Most traders operate exactly like that crowd, rushing in, making predictions, hoping the market will listen to them. But trader Dante doesn't play that game. He doesn't ask, "Where will price go?" He asks, "What is the market doing right now?" In a world obsessed with predicting the future, Dante's approach is almost rebellious. He trades not on guesses, but on the present reality. He reads the market as if it's an endless auction, where value shifts and imbalances appear in plain sight for those who know where to look. Welcome to Trading Psychology Stick, where we decode the minds of elite traders and extract the principles that separate the profitable few from the struggling masses. Quick note, what you're about to learn comes from publicly available interviews and teachings. We're not sharing any proprietary methods, just distilling decades of wisdom into actionable insights. Today, you're going to discover why this auction mindset has kept Trader Dante profitable for over 25 years, and more importantly, how you can use it to stop guessing and start winning. Because once you understand how to trade what is, not what you think should be, the market will never look the same again. Section 1. Kill the prediction, trade what is. Prediction is the silent killer of trading accounts. It's seductive, it's intoxicating, and it's the reason so many traders quietly bleed their capital into the market. When you predict, you're not just making a trade, you're making a bet on your own ego. And the market has a way of punishing ego with ruthless efficiency. Trader Dante learned this the hard way in his early years. He noticed that every time he tried to forecast the future, two things happened. First, he became emotionally attached to the outcome, and second, he ignored the actual evidence unfolding in front of him. Imagine driving a car while staring at next week's weather forecast, instead of the road in front of you. It doesn't matter how sunny it's supposed to be in 7 days. If there's a truck braking hard 2 meters ahead, you're going to crash. That's exactly how most traders operate. They cling to some analyst's prediction, a news headline, or their own conviction, and they miss the warning signs right under their nose. Dante's shift was simple but profound. Stop asking, "Where will price go?" and start asking, "What is price doing right now?" For Dante, this change wasn't philosophical. It was practical survival. He uses auction market theory and market profile to strip away the noise. These tools show him where the market is currently balanced, where value is being agreed upon, and where it's not. He's not gambling on the market's next move. He's reading its current state. When price is inside a value area, he knows buyers and sellers are in agreement. When price pushes outside and gets rejected, he sees opportunity. He reacts, not predicts. I remember one of his trades on the Bund futures. The market had been auctioning in a tight range all morning, building value. Then a sudden spike pushed price above the value area high. Most traders chased it, convinced a breakout was underway. Dante watched volume thin out, order flow stall. In that moment, the market wasn't screaming trend. It was whispering exhaustion. He faded the move, selling short at the extreme, and minutes later, price collapsed back into value. The crowd was left holding losing long positions. The core lesson here cuts deep. By eliminating the need to be right, you free yourself to respond to what's real. Your job as a trader is not to be a fortune teller. It's to be an interpreter of the present. That's where your edge lives. Predictions tie you to a single outcome. Reading the present opens you to multiple profitable paths. So here's a moment of truth. Pause the video for 10 seconds and ask yourself, how many times have you lost money because you knew the market had to do something? Count them, really. The number might shock you. What if, starting today, you stopped predicting entirely and let the market tell you what it's doing? You might discover that the less you try to be right, the more you start to win. Now, here's where it gets interesting. If we're not predicting, how exactly do we read the market's language? That's where Dante's true weapon comes in, and once you see it, you can't unsee it. The market is not a random collection of candles. It's not a chaotic mess of price spikes and dips. Beneath all the noise, it follows a rhythm, the rhythm of an endless auction. Auction market theory is the lens that strips away the confusion and reveals the underlying structure. Trader Dante treats the market exactly like a giant marketplace, one where buyers and sellers are constantly negotiating, testing prices, and finding temporary agreements. Picture a bustling street market. Vendors shout their prices, customers haggle, and eventually a crowd forms around a certain stall where the price feels right to both sides. That's the fair value. But every now and then, a vendor shouts an absurdly high number, and the crowd thins instantly. Or someone offers a ridiculously low price, and sellers pull back their goods. These are the extremes, the edges of value, and they are where opportunities live. Let me share something that might save you years of confusion. I used to think markets were driven by news and fundamentals. Then I discovered this auction framework and realized something profound. News doesn't move markets. Auctions do. News is just the spark that accelerates what the auction was already showing. Once you see this, you stop being surprised by unexpected moves. Auction market theory works on the same principle. The market moves up to find the highest price buyers will accept, and down to find the lowest price sellers will tolerate. Between these tests lies the value area, the zone where most trading happens because both sides agree it's fair. Outside of it, the market is probing, looking for a new balance. If the probe fails, price snaps back into value. If it succeeds, value shifts, and the process starts again. Dante thrives on these dynamics because they provide a real-time map of market behavior. He doesn't need to guess where the next move will be. He simply observes how the auction is unfolding. Is the market accepting higher prices? Is it rejecting lower ones? These questions replace "where will it go?" with "what's it doing now?" And the answers come not from opinions, but from the market's own bidding process. One example he often shares is from a day in the euro futures. The market opened near the previous day's value area, low. Early sellers pushed price lower, testing the waters. But volume dried up fast, and buyers began stepping in aggressively. Within minutes, the market was back inside the value area, trapping shorts. This wasn't just a random bounce. It was the auction rejecting lower prices. Dante bought into that rejection, riding the move back to the center of value, while others were still clinging to their bearish predictions. The deep insight here is that auction market theory turns the market into something observable and logical. It's not a guessing game anymore. It's a conversation between buyers and sellers, and every move is a statement. Your job is to listen. Most traders miss this because they're too busy trying to tell the market what it should do. Dante does the opposite. He lets the market tell him what it's doing, and he profits from that conversation. Quick reality check. Have you ever thought about the market as a living negotiation? If you haven't, you've been trading half blind. Drop a comment below. Type auction if this concept just clicked for you, or confused if you need more clarity. Your response helps me know how deep to go in future videos. So, we understand the market is an auction, but how do we actually see this auction in action? Time to pull back the curtain on one of the most powerful visualization tools in trading. Section 3, Market Profile, the map of value. If auction market theory is the language of the market, then market profile is the map that lets you read that language with clarity. For most traders, charts are just lines and candles, a messy picture of where price has been. But for trader Dante, market profile transforms that chaos into a structured landscape, showing exactly where the market has agreed on value and where it's been testing the extremes. Imagine walking into a massive bazaar from above. You can see which stalls are surrounded by crowds. That's where most transactions happen, the value area. You can also see the quieter alleys where hardly anyone goes. Those are the low volume areas, where price doesn't linger. Market profile draws this aerial map for every session, revealing the distribution of price over time. Now, let me blow your mind with something most traders never realize. The shape of the profile tells you who's in control before a single trade is placed. A perfectly balanced bell curve? Nobody's winning. It's a stalemate. A P shape? Shorts are getting squeezed. A B shape? Longs are running for the exits. These aren't random patterns. They're the market's autobiography, written in real time. On a market profile chart, time price opportunities build into shapes. A balanced day looks like a bell curve, wide in the middle where most trading occurs, narrow at the edges where the market tests and rejects extremes. Other days form shapes like a P, indicating short covering rallies, or a B, suggesting long liquidation. Each shape tells a story about who's in control and how the auction is developing. Dante uses this to position himself where the odds tilt in his favor. When price is in the middle of value, he knows the market is balanced, not a great place to bet on big moves. But when price drifts to the value area high and stalls, he watches for rejection. If it snaps back inside value, that's a high probability fade setup. The reverse is true at the value area low. This is not about predicting, it's about responding to where value is and how the market reacts at its edges. One Bund futures example burned into his memory. The market opened inside the previous day's value area. For hours, it rotated back and forth, confirming balance. Then, mid-morning, it pushed above the value area high. Many traders saw a breakout and piled in long. Dante, watching the profile, saw no volume support above that level. The auction was probing, not accepting. Within minutes, price fell back inside value, triggering a sharp sell-off as breakout traders bailed. He faded that move, capturing profits while others scrambled. The transformative insight here is simple but lethal. Market profile doesn't tell you what will happen. It tells you where the battlefield is and which side is winning right now. It strips away the noise of candlestick patterns and focuses on the structural truth, where buyers and sellers agree and where they don't. Time for a gut check, and this is important. Look at your last 10 losing trades. How many were taken in the middle of value where nothing was really happening? How many were chasing moves at the edges without waiting for confirmation? If you're honest, the number is probably painful. But that pain is your teacher. Here's the thing though, Dante doesn't stop at seeing value in terms of time. There's another layer that shows where the real money is positioned, and missing this layer is like trying to win a poker game without seeing the size of the bets. Section 4. Volume profile. Finding the heavy money. If market profile shows you where price has spent its time, volume profile shows you where the real commitment lies. Time alone doesn't pay the bills. It's the actual weight of transactions that reveals where the market has sunk its teeth. Trader Dante knows that while time can hint at value, volume confirms it. And when you combine the two, you get a map with both the terrain and the pressure points marked in bold. Think of volume profile as the X-ray over the market skeleton. It's a horizontal histogram laid against the price axis, showing exactly how many contracts traded at each price level. High volume nodes are the busy intersections, the places where buyers and sellers have done serious business. These act like magnets, pulling price back because both sides feel comfortable transacting there. Low volume areas are the deserted back alleys. Price tends to shoot through them quickly because there's little interest to slow it down. Let me share a costly mistake I made before understanding this. I once shorted what looked like a perfect technical setup. Price at resistance, overbought indicators, the works. What I didn't see was the massive high volume node just below my entry. The market pulled back to that node like a magnet and bounced hard, stopping me out. That loss taught me what Dante preaches. Volume is the market's memory, and it always remembers where the big business was done. Dante uses this insight in a deceptively simple way. If price approaches a high volume node, he expects chop, hesitation, maybe even reversals, because it's a zone of agreement. But if price enters a low volume gap, he's alert for acceleration. It's like stepping onto an icy patch. There's nothing to grip, and the market can slide through in a flash. All right, we need to pause here for a breathing moment. Take a deep breath. We've covered heavy concepts: auction theory, market profile, volume profile. Your brain might be spinning. That's normal. These aren't Instagram-friendly quick tips. They're professional-grade tools that take time to absorb. The good news? Once they click, you'll see the market with new eyes forever. One of Dante's textbook trades came during a session in the Euro futures. Price had been balancing above a high-volume node all morning. Then, economic data hit, and price plunged into a nearby low-volume gap. Dante didn't chase it blindly. He knew from past auctions that these gaps often get filled fast. He waited for the first signs of exhaustion on the tape, then bought the reversal. In minutes, price had retraced through the gap, right back to the high-volume node, netting a clean profit while the rest of the market was still digesting the news release. The profound truth here is that volume reveals where the market truly cares. Time can be misleading. Price can linger at a level with little actual commitment. But heavy volume means the market has fought and agreed there. Those zones matter. They act as both targets and turning points. Now, think about your own trading. How many times have you taken a breakout trade only to watch price stall at some invisible wall? That wall was likely a high-volume node you never saw. Or maybe you've seen price tear through a level like it didn't exist. That was probably a low-volume area doing its work. By layering volume profile over market profile, Dante has a double confirmation. He sees both where the auction has been spending its time and where the heavy money has been placed. That combination gives him clarity most traders never experience. But here's where the magic happens. Identifying value and volume is just preparation. The real edge comes when you know exactly when to strike. And Dante's favorite moment? When the market overextends and shows its hand at the edges. Section 5. Fading the edge, where the odds tilt. This is where trader Dante makes his living. At the edges of value, where the market's curiosity meets its limits. In the auction framework, the value area is the comfortable center, where buyers and sellers are in balance. But at the very edges of that area, the market is testing, asking, will you pay more, or will you accept less? Those tests are where Dante steps in, not to chase the move, but to fade it, to take the opposite side when the market shows it's had enough. Picture the auction hall again. The bidding has been steady, a fair price established. Suddenly, one bidder yells a number far above what's been accepted all day. There's a pause, no one else follows. The bidder shifts uncomfortably. That's rejection. In market terms, when price pushes to the value area high and fails to attract follow-through, it's a sign the market isn't ready to move higher. For Dante, that's a green light to sell. Early in my trading journey, I was that bidder, constantly chasing moves at the extremes, convinced each push was the start of something bigger. My account bled slowly but surely. It wasn't until I flipped my thinking, waiting for rejection instead of chasing momentum, that everything changed. If you're struggling with entries, this shift alone could transform your results. The beauty of fading the edge is in its math. Risk is small because your stop sits just beyond the extreme. Reward can be large because if the market snaps back toward value, it often travels the full width of the profile. It's a high reward to risk trade, born not from prediction, but from reading the auction's body language. Take his trade on the Bund futures during a midweek session. The market opened inside value and spent hours rotating in balance. Around midday, it pushed above the value area high. Volume dried up, order flow showed no aggressive buyers. Dante sold short just inside the failed breakout, stop a handful of ticks above the high. Within the hour, price slid all the way back to the value area low. The crowd that chased the breakout got trapped. He walked away with multiple R in profit. The deeper insight here is that fading isn't about stubbornly betting against the market. It's about recognizing when a probe has failed. In auction market theory, failed tests are powerful signals. They reveal the price levels the market rejects. These rejections often trigger a rush of orders in the opposite direction, and that's what Dante harvests. Here's your moment of brutal honesty. How many times have you been caught buying the top of a move only to watch it reverse instantly? If you're like most traders, it happens weekly. Now flip the script. What if, instead, you'd been waiting patiently at that same spot, ready to sell into the exhaustion? That's not just a tactical shift. It's a complete mental reframe that separates amateurs from professionals. Comment below with fade if you've ever been trapped at an extreme, or patient if you're ready to start waiting for rejections instead of chasing moves. Your response tells me you're engaging with this material, not just consuming it. So, you understand the concept of fading, but concepts don't make money. Timing does. Let me show you how Dante identifies the exact moment when the trap springs shut. Section 6, Timing the Imbalance. Enter when others chase. In trading, timing isn't everything. It's the only thing. You can have the perfect read on value, the perfect setup at the edge, and still lose if your entry is off by just a few ticks. Trader Dante knows this better than anyone. His secret? He doesn't just watch for the market to reach an extreme. He waits for the imbalance to shift back toward value, then strikes in that narrow window when everyone else is still leaning the wrong way. An imbalance is the auction in motion, a burst of buying or selling that pushes price away from value. Sometimes these moves stick and form a new area of balance. Other times, they fail. The art is in knowing the difference, and that's where Dante's patience becomes lethal. Imagine a crowded room leaning toward one side of a boat. At first, the boat tilts further and further. Then, all at once, the weight shifts, slowly at first, then rapidly, as people realize they've gone too far. That's what a failed imbalance looks like. The early movers scramble to exit, and price rushes back to where it started. Dante's job is to be among the first in the new direction, capitalizing on the trapped crowd. One of his best examples came on the Euro futures during a volatile London session. The market had been balanced overnight. At the open, aggressive sellers drove price below the value area low. Order flow was heavy at first, but within minutes, volume dried up. Then came the tell. A sudden surge of buying absorbed the offers, and price ticked back inside value. Dante went long on that reclaim, stopped just below the session low. The reversal ripped through the low volume area above, straight into the heart of value, hitting his target while the early shorts were still covering. The critical insight here, and this is worth pausing to absorb, timing the imbalance isn't about predicting the turn. It's about reading the momentum of rejection. It's waiting for the market to say, no more, and then stepping in with precision. Most traders either jump too soon, trying to catch the falling knife, or they wait until it's obvious, by which time the best part of the move is over. Dante lives in that razor-thin middle ground. Let's get real for a second. Pull up your trading journal. I'll wait. Now, count how many trades you've taken where you were right on direction but wrong on timing. The number is probably depressing. Every one of those trades could have been a winner with better entry timing. That's not a skills gap. It's a patience gap. Here's a quick exercise that might change your trading forever. Tomorrow, instead of taking your first valid setup, wait for the second confirmation. Wait for that moment when the imbalance actually shifts. Not when you think it might. You'll take fewer trades, but your win rate will likely jump. Comment timing below if you commit to trying this tomorrow. Now, what happens when the perfect setup appears, but the context is wrong? This is where most trading education fails you, and where Dante's wisdom shines brightest. Section 7. Why it depends wins more than always do. X. If there's one phrase that frustrates new traders the most, it's this. It depends. They want certainty. They want rules carved in stone, a magic formula that works every time. But markets aren't a math problem with one right answer. They're a living auction, and every day is a new negotiation. Trader Dante understands this truth so deeply that it depends isn't a dodge for him. It's the core of his adaptability. Most amateurs crave absolutes because uncertainty is uncomfortable. They want to hear, when price touches the value area high, fade it. But the pros know that same setup might be gold in one context and garbage in another. Maybe today's auction is thin and choppy, making that fade high probability. Maybe tomorrow's auction is driven by news, with imbalances strong enough to blow through extremes like they're not even there. The setup is the same, but the context changes everything. I learned this lesson the expensive way. I had a perfect system. Fade every test of the value area high. It worked beautifully, until it didn't. One trending day, I faded the high 3 times, getting stopped out each time as the market powered higher. My system wasn't wrong, but my rigid application of it was. Context matters more than setup. Dante reads this context before committing. He considers the day type. Is it a trend day, a normal day, a neutral day? He looks at where we are relative to higher time frame value. He reads the volume flow. Only when the picture lines up does he act. This flexibility means he can survive and thrive across market conditions instead of being a one-trick pony. Think about it like this. If you're a surfer, you don't paddle out and ride every wave the same way. Some waves you let pass, some you catch early, some you wait to build. The wave, like the setup, is just the raw opportunity. Your read on its shape and speed, the context, determines whether you ride it or get wiped out. One of his teaching moments came in a webinar where he showed 2 almost identical charts. Both had price poking above the value area high. In the first, the market had been balanced all day, volume thinning at the extreme, perfect for a fade. In the second, a strong upward imbalance had been building since the open. Fading here would have been account suicide. The difference? Context. The same picture, opposite trades. Here's a hard truth that might sting. It depends isn't weakness, it's mastery. It's the recognition that no setup lives in a vacuum and that your job isn't to follow a script. Your job is to read the play as it unfolds, adapting to what the market gives you, not what you wish it would give you. So, here's your mirror moment. How many times have you taken a trade just because it looked like a past winner without stopping to ask, does this context support it? If you start adding that question to your process, your win rate might change dramatically. Quick challenge, screenshot your next potential setup, and before entering, write down 3 context clues that either support or negate the trade. Post it in the comments with #ContextMatters. Let's learn from each other's reads. But even with perfect context reading, there's one more demon to slay, the mental trap that destroys more traders than any bad setup ever could. Section 8, the mental health trap of forecasting. Forecasting isn't just a bad habit for your trading account. It's poison for your state of mind. Trader Dante has seen more traders destroy themselves mentally from the constant prediction than from any single bad trade. The problem is subtle. The moment you forecast, you attach your identity to an outcome. If the market agrees with you, you feel smart, validated. If it doesn't, you feel attacked, wrong, even humiliated. And when ego is wounded, revenge trading and tilt aren't far behind. It starts innocently. You predict the euro will rise because of a news headline. You buy in, confident. Price ticks against you. At first, you tell yourself it's just noise. Then it keeps falling. Now it's not just a trade. It's a fight to prove you're right. You double down. Minutes later, you're deep in red, wondering how you lost so much so fast. The pain isn't just financial, it's emotional. You weren't wrong about a chart. You were wrong about you. Let me take you back to a dark moment in Dante's journey, one he rarely discusses but shapes everything he teaches. Early in his career, he had a strong conviction that Bund futures would rally after a key data release. The market did rally for about 2 minutes. Then it reversed sharply, slicing through his entry and hitting his stop. Instead of accepting the loss, he re-entered twice, trying to catch the real move. Each attempt dug the hole deeper. By the end of the day, he wasn't trading the market anymore. He was trading his frustration. That single day wiped out 2 weeks of steady profits. The pain of that day wasn't just the money. It was the realization that his need to be right had hijacked his judgment. He went home that night and asked himself a simple question. What if I never predict again? That question changed everything. Dante's fix is to strip prediction out of the process entirely. He journals relentlessly, not just to record trades, but to track his thinking before, during, and after each one. Over time, he spotted the patterns. His biggest losses came when he was convinced of a direction before the session even started. His most consistent wins came when he approached the market with no bias, letting the auction reveal its hand in real time. The profound realization here is that forecasting amplifies emotional swings, and emotional swings destroy decision-making. By focusing purely on what the market is doing now, you detach your ego from the trade's outcome. The market stops being a test of your personal worth and becomes a puzzle you solve moment by moment. Time for brutal honesty. How many times have you let one bad forecast spiral into multiple losing trades? If you're like most traders, it's your biggest leak. The market doesn't care about your predictions. It only respects your ability to adapt to reality. Drop a comment. What's the most expensive prediction you've ever made? Share the story. Sometimes admitting our mistakes publicly is the first step to never repeating them. Use #CostlyPrediction so others can learn from your experience. Now, let's see all these principles in action. Real trades, real decisions, real money on the line. Section 9, Real-World Examples, Dissecting Dante-Inspired Trades. Theory is sterile until it meets the heat of the market. Trader Dante's edge doesn't live in a textbook. It's forged in the fire of real sessions where money is on the line. Let's step into 2 trades that show exactly how his principles, auction market theory, market profile, volume profile, fading extremes, timing imbalances, come together to create high-probability setups. The first example is from the Bund futures on a quiet midweek morning. The market opened inside the previous day's value area, trading in balance. Hours passed with rotational movement, confirming a fair value zone. Then, just before the European lunch lull, price poked above the value area high. On a candlestick chart, it looked like a breakout. On Dante's profile, it looked like a probe. Volume was thin, order flow hesitant. This wasn't acceptance, it was a test. Dante sold short just under the failed breakout, stop a few ticks above the high. The reversal was swift, pulling price back into value and across to the value area low, delivering a clean, high reward-to-risk win. The lesson? A failed test at the edge is not weakness in theory. It's an actionable trade in real time. Let me add something here that textbooks won't tell you. That moment when price fails at the edge, your heart rate spikes, your fingers hover over the trigger. Every instinct screams, wait for confirmation. But by then, the move is half over. Dante's edge is acting in that uncomfortable space between maybe and definitely. That's where the money lives. The second example is from the Euro futures during a high volatility London session. Overnight, the market had balanced in a tight range. At the open, aggressive sellers drove price below the value area low, creating an imbalance. At first, it looked convincing. Heavy selling, quick ticks lower. But then, the tape shifted. Volume dried, buyers stepped in, and price reclaimed the value area low. Dante went long on that reclaim, using the low as his stop. The market surged through a low volume gap above, hitting his target in minutes. The lesson, timing the imbalance, is about catching the moment the market says enough and flips direction, often trapping the crowd on the wrong side. What makes these trades work isn't luck or prediction. It's the alignment of context, structure, and timing. Dante wasn't guessing what the market should do. He was reading what it was doing and reacting accordingly. In both cases, he was trading against the weaker side of the auction, fading the crowd when the auction rejected their prices. Picture yourself in those exact moments. The Bund pushing above value. Would you have chased the breakout or waited for rejection? The Euro reclaiming value. Would you have gone long or stayed frozen, afraid of the prior selling? Your honest answer reveals whether you're trading with the crowd or against it. These aren't just trades, they're a masterclass in reading market language. And once you start seeing these patterns, they appear everywhere. The market is constantly showing its hand to those who know how to look. But here's the thing. Knowing these setups isn't enough in today's market. You're not competing against other retail traders. You're up against institutions, algorithms, and traders who've been doing this for decades. Let me show you what it really takes to survive in this arena. Section 10, Competitiveness in Trading, Lessons from Dante's Interviews. Trading is not a casual hobby. It's a blood sport played on a global stage where your competition is sharper, faster, and better capitalized than you. In his interviews, trader Dante makes it clear, if you're not prepared to think like a professional athlete preparing for the Olympics, you're just another warm body adding liquidity for someone else's win. The market doesn't care if you've had a bad day, if you're tired, or if you deserve to win after a losing streak. Every session is a fresh auction where your edge is tested against the best minds and machines in the world. Dante learned early that talent alone wasn't enough. It had to be paired with relentless refinement of skill. He compares it to sharpening a blade. Even the finest steel will dull without constant work. Let me share a story that captures this perfectly. A friend of mine, brilliant programmer, thought he could solve the market with algorithms. 6 months later, his account was dust. His mistake? He thought intelligence was enough. He didn't respect that he was competing against teams of PhDs with unlimited resources. The market humbled him fast. Survival requires more than smarts. It requires respect for the competition. One lesson Dante emphasizes from his Chat with Traders appearance is the role of adaptability. The auction is never static. A strategy that prints money in one market phase can hemorrhage in another. This is why he journals every trade, every day, searching for patterns, noting which setups are performing and which are fading in effectiveness. It's a process of constant edge maintenance, trimming away what's gone dull and honing what still cuts. He recalls a period in his career when his favorite fade setups stopped working. Instead of stubbornly forcing them, he stepped back, reviewed months of data, and discovered the shift. The market's intraday volatility had compressed, making extremes less pronounced. His solution wasn't to abandon fading, it was to tighten his parameters and adjust his timing. Within weeks, his win rate recovered. Time for a reality check. Take a breath. We're deep into advanced concepts and your brain might be overloading. That's good. It means you're stretching beyond your comfort zone. But let me simplify this. Trading professionally isn't about finding the holy grail strategy. It's about constant adaptation, like a boxer adjusting to their opponent's style mid-fight. The deeper truth here is that competitiveness in trading isn't about aggression. It's about preparation and adaptation. Pros like Dante don't just show up and react. They arrive with a plan, but are willing to pivot when the auction's conditions demand it. They train their pattern recognition daily, not just to see the setups, but to feel the shifts in their quality. Ask yourself honestly, do you treat trading like a performance sport or more like a casual pastime? Because the traders who treat it as the former are the ones extracting money from those in the latter camp. If that stings good, use that feeling as fuel to level up your game. Quick action step. Starting tomorrow, keep a competition journal. Note one thing each day that the smart money did that you missed. Over time, you'll start thinking like them instead of against them. Comment compete if you're ready to embrace this mindset shift. Speaking of mindset shifts, let's examine the expensive mistakes that separate amateurs from professionals. Section 11. Common mistakes and how Dante avoids them. The market punishes carelessness, and most traders hand it their money through the same set of recurring errors. Trader Dante has spent decades watching these patterns claim account after account, and he's built habits to sidestep them entirely. The first and most common mistake: overtrading in balanced markets. When the auction is comfortably rotating inside value, amateurs mistake every minor push for the start of a breakout. They jump in, get chopped to pieces, and repeat until their confidence and capital are gone. Dante avoids this by recognizing balance for what it is: a waiting room, not a battlefield. Unless the market is testing an extreme or showing signs of genuine imbalance, he sits on his hands. Here's a painful truth I learned firsthand. Most of my losses came not from bad trades, but from unnecessary trades. Boredom is expensive. That urge to do something has probably cost you more than any stop loss ever did. Dante's cure? He calls it productive waiting, using quiet periods to review setups, adjust levels, or simply step away from the screen. The second mistake is ignoring volume context. Many traders treat all price moves equally, assuming a tick is a tick. Dante knows better. A push supported by rising volume tells a different story than one drifting on fumes. He filters every price movement through this lens. Is the auction attracting participants, or is it running out of interest? That question alone has kept him out of countless losing trades. A third fatal error is trading setups in the wrong context. This ties back to his "it depends" philosophy. A fade at the value area, high during a normal day, is one thing. Attempting the same during a strong trend day is an invitation to get steamrolled. Dante builds his daily plan around the type of auction he's in, adapting his playbook accordingly. One day in the Euro futures illustrated all three mistakes in real time. The market opened inside value and stayed balanced for hours. Twice, price poked toward the value area high. Twice, low volume rejections signaled no follow-through. Amateurs kept shorting after each rejection, but the broader context was a slow grind higher with underlying bid support. Dante stayed flat, avoiding both the false shorts and the eventual breakout that punished them. His decision not to trade preserved both capital and mental energy, a win that never shows up in the profit column but is just as valuable. The transformative insight is this: avoiding mistakes is often more profitable than chasing wins. Every avoided loss improves your net result, and every trade you skip when conditions aren't right is one less chance to sabotage yourself. Now, brutal honesty time. Open your trade journal. How many of your losses came from these exact mistakes? Overtrading in balance, ignoring volume, wrong context? I'm guessing it's most of them. The good news? These are completely fixable with discipline and awareness. Here's your challenge. For the next week, before every trade, ask 3 questions. Is the market balanced or trending? Is volume supporting this move? Does the context support my setup? If you can't answer all 3 confidently, don't trade. Comment below with discipline. If you accept this challenge, let's hold each other accountable. But knowing what to avoid is only half the battle. To consistently execute at a high level, you need a bulletproof process. Section 12. Building your own Dante-style system. Practical steps. A trading edge is useless without a structure to support it. Trader Dante's success doesn't come from a magic setup. It comes from a disciplined daily process that makes sure he's reading the auction accurately and acting only when the odds are in his favor. The good news? You can build a similar framework for yourself. Even if you're not a 25-year veteran, it starts before the market opens. Dante reviews the prior day's market profile to define the key reference points: value area, high and low, point of control, notable high-volume nodes, and any low-volume gaps. These aren't predictions, They're landmarks, ready to be tested or rejected. He also notes higher time frame context, like weekly or monthly value areas, so he knows whether today's auction is operating inside or outside those larger structures. Next, he maps possible day types. Is the market likely to trend, balance, or rotate? This isn't guesswork. It's based on how the auction has behaved recently and the kind of catalysts on the calendar. Knowing the probable day type helps him decide which playbook setups to prioritize. Let me give you a game-changing tip that took me years to learn. Your pre-market prep is more important than your real-time decisions. When you know your levels and context before the bell rings, you're responding to a plan, not reacting to surprises. Once the market opens, he observes without rushing in. For the first 30 to 60 minutes, he's reading participation. Is volume building at the extremes, or is price being rejected? Is the point of control shifting, suggesting value migration, or staying fixed, confirming balance? These live reads tell him whether his pre-market scenarios are playing out or need adjusting. When a setup aligns, say, a push to value area, high on thinning volume during a balanced day, he executes with precision. Entry close to the extreme, stop just beyond. Target set toward the opposite edge of value. Risk is defined, reward is calculated, and the trade is taken without hesitation. If the conditions don't align, he doesn't trade. Simple, but brutally hard in practice. After the session, he journals not just the trades, but his observations and decision-making. Did he follow his plan? Did he misread the context? Were there opportunities he hesitated on? This feedback loop is what keeps his system sharp and responsive to changing market conditions. The profound truth is that a system isn't just a set of rules. It's an ecosystem of preparation, observation, execution, and review. Without all four, even the best setups will fail over time. So here's your homework. And yes, this is actual work that separates dreamers from doers. Tonight, create a simple pre-market checklist. Previous day's value levels, potential day type, and key scenarios to watch for. Tomorrow, spend the first hour just observing how the market interacts with your levels. No trades, just observation. Then journal what you saw versus what you expected. This is how you build market intuition, not through more indicators or systems, but through deliberate practice and reflection. Comment system below if you commit to creating your checklist tonight. And share one insight from your first observation session tomorrow. Let's learn together. Almost there. We've covered the principles, the tools, the mindset. Now let's bring it all home with the bigger picture. Section 13. The path to cynical realism and consistent profits. At the heart of trader Dante's philosophy is a truth most traders never accept. The market owes you nothing, and your opinion means even less. Cynical realism isn't pessimism. It's liberation. It's the moment you stop trying to bend the market to your will and start flowing with what it's actually doing. That shift removes the emotional chains that prediction and ego clamp on your mind. Think about the transformation we've walked through. You began by killing predictions, learning to trade the present auction instead of an imagined future. You discovered how auction market theory reveals the market's native language, how market profile maps its value structure, and how volume profile shows where the heavy money sits. You saw how fading the edges and timing imbalances let you exploit failed tests, and how it depends is a mark of mastery, not indecision. You learned the common mistakes amateurs make, and how simply avoiding them can tilt the odds in your favor. You confronted the mental traps of forecasting, studied real-world examples of the principles in action, and faced the truth about how competitive this game really is. Finally, you saw how all of it comes together in a structured system you can run day after day. This isn't a collection of random tips. It's a cohesive way of seeing and engaging with the market, one built on observation, context, timing, and discipline. The cynical realist doesn't need to be right about the future. He just needs to be right about the now. And when you're consistently right about the now, the profits take care of themselves over time. Let me leave you with something Dante said that changed how I see every trade. The market is going to do what it's going to do. Your job isn't to predict it or fight it. Your job is to recognize what it's doing and position yourself accordingly. That's it. Everything else is ego. So here's your final mirror moment. Can you let go of needing to be right? Can you show up each day without a story to prove, ready to adapt to whatever the auction offers? If you can, you've already stepped onto the path that Dante walks. One where trading is no longer a coin flip, but a craft. And remember this one-liner that captures everything we've covered. The market doesn't reward your predictions. It rewards your ability to listen. Stay tuned. In the next video, we'll decode another trading legend whose approach to risk will make you question everything you think you know about position sizing. Trust me, if Dante's methods opened your eyes, what's coming next will blow your mind. Final call to action. Step into the auction with new eyes. You've just spent the last hour inside the mind of one of trading's most consistent performers. You've seen how trader Dante strips away predictions and trades the raw reality of market auctions. You've learned frameworks that most traders never discover: market profile, volume profile, fading extremes, timing imbalances. More importantly, you've seen how letting go of the need to be right can paradoxically make you right more often. Now comes the moment of truth. Knowledge without action is just entertainment. So here's my challenge to you, and it's one that could change your trading forever. For the next 5 trading days, commit to taking 0 predictive trades. None. Instead, wait for the market to show its hand at the value edges. Wait for rejection. Wait for imbalance shifts. Trade only what you can see, not what you think might happen. Document this experiment. Share your results below using #AuctionChallenge. Tell us, what was the hardest part? What surprised you? Did your win rate change? Your stories don't just help you. They create a learning laboratory for everyone reading. If this video opened your eyes to a new way of seeing markets, share it with one trader who's still stuck in prediction mode. Sometimes the greatest gift you can give someone is a new perspective. Subscribe and hit the notification bell, not for the algorithm, but because you're serious about mastering the mental game of trading. And remember, every time you're tempted to predict where the market should go, ask yourself, what is it actually doing right now? That simple question is worth more than 1,000 indicators. The auction is always speaking. The question is, are you finally ready to listen? See you in the next one.